merger, HDFC-HDFC Bank. Let's cut across to my colleague Sapna Das, who's standing by with Atanu Chakraborty, the new chairman of HDFC Bank, for his first interview post the merger. Sapna, over to you.
Thank you, Prashant. This is an exclusive conversation with the chairman HDFC Bank, Mr. Atanu Chakraborty. As we all know, he has worn many hats. From the depth of intricate economic policy making at Finance Ministry to now heading this very important India's largest private sector bank. So thank you so much for giving us time.
Thanks so much, Sapna, to see you again.
Right, sir, right, sir. At times it just feels like the old days, except that, you know.
It's such a pleasure.
Right, right. Thank you so much, sir. And congratulations on this big development in India's financial sector. So first off, this is a big lift. The merger is a big lift for the balance sheet of HDFC Bank. So how do you see the growth panning out over the next 3 to 5 years? What is the growth vision here?
Well, with housing inside as one of the part of the portfolio of the bank has been tracking the economy of the country with an efficiency factor of few additional percentages. Therefore, over the next 5 to 6 years, you can see this bank growing at a very fair clip across all sectors of economy. Housing, has, as you see, has already been added. Then there is MSME, there is corporate. Then there is entire retail part, which starts with auto to personal loan to two-wheeler loan. And then there is the large priority sector lending, which extends from MSME, micro, to agriculture, to small and marginal farmers. So it extends across the entire gamut of the economy, and that's where the growth is coming from, because Indian economy itself is growing at a fair clip, and bank with its extended reach now is able to pick up that entire momentum.
So one quick question on the housing market. Generally, a housing portfolio, works primarily on, lower interest rates or low yields. So, all in all, over a period of time, how do you think that this is going to really impact your net interest margin, so to speak? Actually,
that's where the synergies are coming. While already roughly 40 million customers were there with HDFC Limited, but unlike bank, they didn't have access to cheaper funds, which were the current account, savings, and so on and so forth. The bank, through its very large branch network, which is also very efficient and captures a very large part of the system's deposit and the savings in the country, is able to garner funds at much lower rate. And that's what makes the growth of housing not only possible, but also grow at a much faster rate.
But in the shorter
and also on good margins there, as you asked. I will not get into the number.
Not the numbers, but a bit more of elaboration.
It brings that cheap fund does bring in the right kind of a margin, because the mortgage market is very sensitive to the cost of funding.
So, okay, fine. So you actually expect the NIMs to be on the healthier side down the road, especially with the housing market coming in full force. Because so far we have not been hearing about the bank much in terms of mortgages. HDFC has been the big pioneer, the big brand as far as the mortgage market is concerned. So I think this is one of the issues.
HDFC pioneered the mortgage market in the
absolutely,
country.
Absolutely.
And they did it all along and did a fantastic work of it.
Right, right. Also, the other thing that people want to know, sir, is that, customer base is going to be a huge benefit from this merger. So what are the opportunities for you in terms of cross-selling of products to the HDFC customers?
Well, as of now, roughly 30% of them are customers of the bank, of 40 million odd. So 70% straight away offer themselves as possible customers, and bank can offer them many other products on the personal loan side, on the retail side. Many of them may have business interest, and then there are subsidiaries. There are subsidiaries in insurance, there are subsidiary in mutual fund, and so on and so forth. So there again the distribution takes place. So there is a very strong cross-sell and distributive part. But the synergies don't end there. That is on the business layer. The synergies is also on people, getting 4,000 very talented people into the organization itself is a huge synergy. There's a synergy in terms of knowledge and processes, handling of a customer. HDFC's handling of customer has been par excellence, and I guess that is something that will continue in its new format inside the bank also. And of course, new set of shareholders are getting added on, and the subsidiaries. So therefore, not only on the business front as far as product is concerned, but also across various facets of the organization, it is a very, very highly synergistic coming together.
Okay, but doesn't this also have its own set of challenges, like for instance the HR integration and any other thing that you can think about? Though of course this has been well thought out. You had first initiated it in April 2022 and it's now coming to a conclusion, or rather it has come to a conclusion, so to speak. But any challenges that you also foresee? Or
we had teams at two levels. One who were handling the regulatory and the legal part, and a team of very senior management people from both the sides who were looking after integration across 30 areas, and headed by two directors from both the companies. They went through the entire rigmarole of each and every part of integration, and it has been a long 1 year, and they really burnt midnight oil there.
okay.
And you are absolutely right. The HR, systems, culture, and governance, these are key to whenever two organizations come together. The culture of these two organizations is very similar. They both swear by governance, and they are very, very systems driven. And bank also brings its own systems in terms of its credit culture, which is exceedingly good, as you know, and so was HDFC. And certainly people, I mentioned 4,000 extremely talented people, and bank intends to see that they are very well taken care of.
Okay, so just going back to the heavy lift that your balance sheet has got now with this merger, one question that does the rounds, I've asked it in one way, I'll still ask in another way, is how do you plan to take on competition in this market? It's a cutthroat market, and you have acquired this massive edge now. So you're I'll not say very close, but you're inching towards the big daddy in the market, and of course you have other private competitive peers right behind you. So actually, how do you see this over the next 2 to 3 years? What kind of excitement can we expect over here?
I see this very, very differently. Let me start with housing. In India, housing is just 11%. Mortgage is just 11% of GDP. China or Southeast Asia is about 20%, Western countries are about 60%. It's a very under-penetrated market, despite the fact that you see a lot of hoardings around. It can only go up as the growth rate is going up. As you know, we are moving at good pace towards a 5 trillion economy. Government has built up huge amount of urban and semi-urban infrastructure, which is also catalyzing demand for housing. So this is one sector which is going to grow, and I guess that's space for everybody out there. Now when housing and construction sector grow, they have huge employment generators. So they would generate demands. First, they'll generate savings and liabilities, as deposits are known. So bank gets a chance to channelize those savings into the economy, and then use them for further funding and fueling the credit growth. As I said, be it corporate side, be it MSMEs, be it agriculture, or the personal retail loans of various denominations. Therefore, I don't see competition per se. I see only opportunities there with the way things are and the way the engine is now very well set with the mortgage piece along with insurance and AMC, etc. also brought in, so that customers' multifarious needs are met under more or less one roof because of the distribution power of the bank.
And you are not too large. That's not a concern. That was a strategy.
Well, the bank is considered a systemically important bank, but as one sees, banks can only be as large as the economies are. Therefore, while it has huge value, its size has to grow, it has to cater to the credit growth in the country, and in that term it will only grow larger by the year.
Sir, you mentioned about MSME, agriculture and all. In terms of priority sector lending, there are certain stipulations which have come out from the Reserve Bank of India. So you think that you'll be able to meet that, and that's going to go as per the roadmap that has been indicated?
Well, there is a standard stipulation for every bank. Whereas the same stipulations weren't there for HDFC Limited, while to a very large extent they were brought pretty close. Therefore, certain dispensation has been given by RBI. They have provided us, very kindly provided us a roadmap to it, and we should be able to meet it.
You should be able to meet it. Okay, okay. Also, in terms of branch expansion, so I mean, HDFC Bank, in terms of branch network, has been fairly active in the last few years or months. You can say that, but digital is a new way now. So, I mean, how are you going to look at it? Is it going to be a focus via the digital reach, or you're going to have this pan-India branch expansion?
Go together, Sapna. While we add certain branches straight away with HDFC.
Give us some numbers if possible. Give us a sense.
And well, I will avoid numbers because it's also a silent period, and numbers tend to change. Almost a branch gets opened every day. Therefore, but there are 8,000 plus branches which is already in place. 8,000. 200 odd branches which are already in place and getting added every day. However, it's very important to make use of digital to make the journeys easy, and digital across, whether it's on the liability side, that is getting the savings in, or when people use product, make their payments. And that's a challenge, let me put it this way, because technology is changing every day. Expectation of people is changing on daily basis, and there are fintechs who are also challenging banks.
Correct.
And one has to ensure that we co-opt them in the process of reaching out to people. Therefore, both digital as well as the physical part of the banking system have to go step and step to ensure that the banking services reach out to the remotest place and to the last person.
So it's going to be a combination of both, and
Yes,
no
absolutely.
number as of now. It's a silent period. Also, sir, in terms of the repricing, the lag timing for the repricing of your retail book. Say, for example, there's shift of loan mix towards retail MSME segment. There's a lag repricing of the book, and there's a gradual building up of the PSL book for the bank. So, what sort of impact do you expect on margins, at least in the near term?
Originally, the bank, during the pandemic, because we could not reach out on retail side, was slightly more in favor of the corporate book had become heavier. With mortgage coming in and retail also picking up, I guess that thing would be corrected, and that would ensure that automatically the retail versus wholesale mix gets taken care of, because it was already built in favor of wholesale during the pandemic. That in a sense provided us a good platform to carry it out. Otherwise we might have to do a little bit more of wholesale. The bank remains a wholesale, a universal bank, would provide and cater for the wholesale banking needs of the corporates, big corporates, mid corporates, smaller companies, MSME, towards the construction finance, then towards housing, retail financing, and the entire gamut of priority sector lending.
Okay. No, just one small bit on the pricing of home loans, especially. So now that it's part of the bank, I mean the entire network is part of the bank, how competitive are you going to be in terms of your interest rates or pricing of loans? I mean, I'm not looking at...
Watch out.
Okay.
Watch out the growth, and you will see the bank being able to provide a competitive finance to those prospective home buyers with a very good, comfortable journey. It's very important that people who come, buying a house in India is a one-time activity.
Absolutely.
For people. People put in their savings, life savings into it. So it's very important that they have faith, they have trust in their financial.
It's also a kind of an emotional decision.
Absolutely, and bank is going to provide that journey, which will ensure that people are happier after buying. That's very important.
Absolutely. So this is going to be driven as per the market and signals from Reserve Bank of India, or do you think that the merger itself can lead to some kind of relief for customers, so to speak?
In a sense, the rates get actually driven by the interest. You know better in the economy, and the way the rates pan out based upon how Reserve Bank sees the interest rate regime in the country has to be. So housing is just a subset of it, or for that matter any other segment, then becomes a subset of that regime.
And just one more side here. So at the moment there's a pause, but what is the expectation in the banking sector? Do we expect this pause to continue, or inflation numbers could be higher in H2?
As we are seeing the assessments by RBI itself, it shows the inflation to be sort of easing up. However, in the fiscal stability report, they have also alluded to the global lack of growth globally, as well as sticky core inflation globally. So I guess those are the concerns RBI itself has expressed, so we need to be mindful of that. But otherwise, I guess there is a likelihood of further easing on inflation, let's put it this way.
Okay.
Unless there is something, some events which do cause.
Right. But the interest rate relief could be much later.
We'll have to wait for RBI action on that.
Right. So also one more question, how are you going to handle the HDFC deposit holders? How is this transition going to work out? What is it you're telling them?
Well, they would be handled as the prime customers of the bank. They become fixed deposit holders hereinafter. And they will be continued to be serviced from the branches, respective branches from where they were earlier serviced. For them, there won't be a change in the day. It's the same thing which continues. And I know...
but there will be an interest rate differential, so
yes,
attract them to the bank?
Fixed deposits have, and the other public deposits sometimes had a differential. However, they get far more flexibility when they come to the bank and start banking and start putting money in FDs and other such products.
Okay. So, okay, fine. So you're hopeful that a large chunk of them
I'm certain they're all
stay
going to
with the
remain.
bank.
Yeah, they will all remain with the bank.
They will transition.
Yeah, they'll simply transition.
Right. So the kind of board structure that you have now at HDFC Bank, what kind of a strength is it? How do you look at it right now, especially amidst your private sector peers?
From HDFC Limited, Mr. K.K. Mistry and Mrs. Renu Karnad have very kindly consented to come on board. And also we have recommended to RBI to bring as executive, as a whole-time director, Mr. V.S. Rangan, so that the board strengths of HDFC are brought in. The existing strength of the board of HDFC Bank, which is driven by the RBI requirement of people from specific fields, like you need a director who represents an expertise in agriculture, you need a director who represents a field in finance and payments and banking, you need a director who requires to be from MSME sector. So the directors represent those particular fields and their expertise from that. Very eminent people, very knowledgeable, and above that, extremely hardworking. Being on board of a bank calls for lots of, giving long hours and lots of work. And the entire board is an excellent board, which not only provides insight, but is also willing to work very hard on,
that's true.
on that.
So
and that's what makes this. And then on the senior management team, I have Mr. Shashi Jagdishan, who is the CEO, ably leading his team of Mr. Kaizad Bharucha, Mr. Bhavesh Javeri, who are the other existing whole-time directors. So, and of course, rest of my senior management team, which is extremely talented and very hardworking, and above all, very motivated and very sensitive to the requirement of customers.
Right. So most of the founding members of the parent HDFC, I mean, they are going to be on the bank board.
As I mentioned.
Yes. It's almost like a new rule, new lease of life for them. Sir, one broad question.
And of course, Mr. Deepak Parekh, who had actually led the entire journey, created the bank is his creation as well of sorts, his thought process. He, on account of age, cannot be on board of the bank, but I'm sure we can. Everybody can go and seek his advice once in a while.
Right, sir.
If at all he finds time for that, because he has over these years has been a doyen in the field of finance and created this entire panoply of organizations which are country proud.
So a quick macro question. What are the challenges that you foresee in the next 1 to 2 odd years for the banking sector as such? Public sector banks have really pulled up their stocks to a great extent. But in many ways, the private sector is, it's kind of far ahead. I mean, you're faster, leaner, meaner, so to speak. But what are the challenges that you foresee on a macro side also, global headwinds as of now? And also what we need to do to actually perk up India's banking sector, or rather take it to the next level. Anything specifically that you'll be telling the government or in any kind of an interaction with the GOI at some point in time?
Well, banking sector in India is, if you ask me today, is in the pink of health.
Okay.
The NPA is one of the lowest. You have been tracking this, so you know. They are now able to lend aggressively. They are in a position to meet the growth impetus in the country. So I see that as a big positive. Private sector banks already are very well capitalized. Maybe on the private sector, public sector, they need to improve their capitalization, if you ask me. For something one need to do is their capitalization, if it improves, they, whenever the business cycles hit, and it hits every bank. they can manage it much better. And then the job is to push growth where there are global headwinds today. There is a global deceleration of growth. But India has weathered that, has kept its growth up. Government has been putting a lot of capex in. Therefore, meeting those requirements for finance would be a critical factor. And of course, one big challenge always remains as to how long-term debt market develops in the country.
Right.
It's the biggest challenge as to how the bond market develops and how banks play their roles in that. It would be one piece that would always remain, because if the bond market develops well, banks will find it easier to fund infrastructure because the exit is easy.
Correct.
And that's very critical.
Right, sir. Right, sir. That brings us to an end to our lovely conversation. Amazing to see you here, sir, and amazing news for the amalgamation. On that front, the largest private sector banking entity in India, and also, I think, 4th largest by market cap globally.
That's what I hear.
So thank you, sir. Thank you so much for giving time to CNBC-TV18. It's always a pleasure, and we'll keep coming back to Mr. Atanu Chakraborty as and how it's possible.
Thanks so much, Sapna. It was really a pleasure.
Thank you, sir.
Meeting you again and chatting with you.
Absolutely. Thank you. Thank you very much for watching.